Take a look at me now. I'm just sitting here in the fortress of solitude, staring at my MacBook, making some trades. I've got an idea here that you might find utterly ridiculous, but I think I'm going to do it anyway because it just seems like the right thing to do at the right moment, and that is CVS. CVS Health Corporation, ticker symbol C to the V to the S. They took a little beat down recently. Let's see here. If you look, let's see. April 21st is when I actually made the trade. So they were down in this range when I put on a put credit spread on April 21st, 2023. They're trading at around 72.64 according to the chart over here on Yahoo Finance. If we go up to the spreadsheet, here is the CVS put credit spread. It was a 70 short leg, 68 long leg, $2,000 in collateral, 10 contracts, and we collected. It had a 5/5 expiration, which is today, and I collected $360 to do so. Okay, so then if we go to May, and I don't believe I'm pretty sure I didn't do this on the camera yesterday, so I began to manage this trade yesterday. CVS, I sold the long leg, the $68 long leg, 10 contracts, sold those, closed for $270 in premium. And then I rolled the 70 out from a May 5th expiration to a May 12th expiration for $350 in credit. So if we look over to where that position is now, it is sitting there at $70 strike, 10 contracts. So that's $70,000 in collateral. If we click through, in fact, let's click through CVS first. Let's click through CVS so we can see those three tally bills right there. So there's the three. April 21st collected $360, right? Let's put it on the board. Yes. So here is 360, and then let's move this out of the way just a little bit. Then we sold the 68 long leg closed for $270, right? And then we rolled the $70 put for a 5/12, a May 12th expiration, and collected $350. So that's $980 that we have pocketed, but we still have $70,000 of collateral at risk. So let's see where what this would cost us to close. Okay, that we need to go up here to our position. Let's go to our position. There it is, $70 put, 10 contracts, $70,000 in collateral. It's going to cost some dollar bills to close it. It is currently trading at $71.17, up 3.46% today. Now, if we wanted to close it, what would that cost us? 10 contracts, okay? And this is going to seem crazy, but it's going to cost around $530 to do so. So if we spent $530 to close it, we would have $450 in profit divided by the 70,000 in collateral. And then it was in April 21st when this began. There was 9 days remaining in April plus these 5 days. That's 14 divided by 14 days, and then annualized 365. That's 16.7% return. It's not the math that you had earlier when you were running this. Oh, that's true. Well, that's because I think I was running it on $50. So that bid and ask has changed since because CVS has come off its day highs. Let's take a look. Let's take a look at it now. One day. So yeah, it was up to 71.43, 71.44, and now it's at 71.18. And there's just something inside telling me to close it down. Just close it down. I mean, it's still how much? 400 and some dollars in profit in 14 days. That's not bad. We'll free up $70,000 in the collateral. My concern with today is that the market is gonna change direction, and I could be in completely wrong. It's already come off the day's high. It was up over $400 on the Dow. I just don't wanna be eyeballing and nervous about $70,000 of collateral on CVS. Now, we would own CVS, but, there's probably other things we'd wanna own with our $70,000. Let's go back to this. Oh, yeah, see, no, that's 1 month. Go to 1 day. Alright, it's just still bouncing around. Let's go to the 1-minute charts on the CVS and see what's up. Yeah, see, it's going downtown to Chinatown. Still up today, over 3.25%, but it's off of that high where it was 71.44. Will it rebound or will I watch it fall downtown? We'll keep watching it. I should have made that trade earlier, closed it down at the 50 cents per, but it easily could bounce back up. You know how the day goes. But I just wanted to share that with you. Sorry I was not able to close that out live, but we will keep an eye on it. Otherwise, we'll let it ride through the weekend and then check back on it next week. But if it gets back up in that $71.44, 45, 50 cents, and it's 50 cents to close, 10 contracts, $500, I'll probably do so just to pull that profit off the table. So there we have it. Just a no pulling of the trigger this time, but we have other things to consider as well. In fact, how's the big board looking? We only have 3 positions remaining that expire today, all of which are right now a let it ride. What's Verizon doing? Verizon's at 37.25, so we're in good shape of keeping those shares and collecting all of that premium from the trade. Okay, so other things to look at today, over to the big board on the watch list. What's going on there? Anything stand out? I know we have some Bank of America covered calls we could trade, but Bank of America has been making my butt stink lately. Lots of green today, a little bit of red, and on those reds, we own those. We own the AT&T. We own Intel. We own Verizon. The only reds that we see on the board. Yeah, see, they're coming off today's highs already, which was my concern, but S&P still looking good though. Is this accurate? 59.77, that doesn't seem accurate at all. Let's refresh. Whoa. Hey, hold your horses, kid. We're running back up or what? Or do we have a delayed signal? Nope, we're running back up a bit. So what does that mean for CVS? Anything? Nothing. Not a darn thing. All right, I'll check back very soon and we'll see what else needs to be managed. And we'll be rooting CVS to chug, chug, chug back up the hill. See you in the next video.